All right, testing. All right, that's good. All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is January 6th, 2023 on a Friday. Let's go ahead and get straight to it. We did have our non-farm payroll report release at 8:30. I did a quick reel on Instagram on it. Um, if you like those reels, we can do them more. Obviously, I don't know how to use TikTok or reels like that. I'm not very creative, but really, it's not about being creative. It's more about just giving you the information and explaining things in a correct manner. So, you have your reels on Instagram if that's your thing. I'm more of a YouTube guy, talking to you guys directly, answering questions. So, maybe if we do an Instagram live, maybe that works. Any kind of suggestions, whatever is easy for y'all. If you say, hey, can we do an aftermarket note or a mid-market note during the day? I'm here in the office. So again, videos are not very difficult to make. It's more just finding the time for you guys that everyone can get on. The good news is obviously the YouTube video, it is live, but it is recorded so you guys can watch it anytime. So again, if you have any kind of suggestions on timing, when I should do this, when can I explain that, please comment on the video and let me know. I really do appreciate it. Or you can shoot us a DM at GAR Capital on Instagram. All right, enough of that. Let's go ahead and get to it. Quickly, the Dow futures are up 373 points. Nice bounce. NASDAQ up 1.13%. Nice bounce. S&P up 1.17%. Again, still holding that trend line, still chopping around. 3,900 is what we're looking for. I know. It's just been that way. If you put things in context, on Monday will be the first full week of trading, 5 days in the past 3 weeks. So it's just been a very low liquidity holiday kind of weeks. Most people take the last couple of weeks off in terms of the market. This is just what it is. So I expect the volumes and liquidity to be boosted up a lot higher than they are now. Maybe we'll get some direction moving forward. Again, this pop is nice. Don't get me wrong. But again, if you're looking at your top left box here, I'll expand it here on the S&P 500 futures. Again, what I look at every single day of my life, and you could see just that trend line holding. Again, so if you are a bull today, you're probably feeling some relief. If you're a bear, you're pretty much pulling your hair out. And if you're just watching every day, you're just like, wow, this is weird. But that's just what it is right now. Again, just choppy, again, ascending trend line here. We did break below, but we did not settle below. So again, you could see just a nice pop. But really, until we get to 3,900 and 3,920, it's just chop. It's just chop right now, at least on the indices. We'll go over the NFP number tomorrow. NFP number in a bit. Russell 2000 futures up 1.37%. Crude oil up 1.37%. Gasoline futures are up 1.13%. Gold futures up 0.71%. I haven't talked about gold in a while, but remember, I'm not a huge fan of gold. But if you guys remember watching the morning note for a while now, our buy level, or what I said, the level that you're probably looking for is that 200 weekly average or around 1700. I did not get into it. I actually hate trading gold. Only in futures does it work. I didn't trade futures on gold. This is the margins a little high. But again, you could see that nice bounce above 1700. That was pretty much the level to buy if you were looking for gold for a quick one. If I go back in time here looking at 1700, I would have taken 1800, but it continued to go higher. You got next resistance here around 1881. So again, kind of running around a little bit of room there. I'm not saying we can't go above it, but again, a nice bounce on gold futures. But again, remember that 1700 level we've been talking about for a while. Silver futures up 1.8% today. Copper futures up 1.36%. Euro dollar, again, the euro dollar has been kind of correlated to the S&P 500 futures. Still above that trend line that we drew here on the weekly. We still want to get to 107.81 to 108 before anything, before we start seeing some real juice to the upside, at least on the euro. And again, that would show that the dollar is getting weaker, is what we want. Dollar yen 133.40 flat. Pound dollar 119.25. Up 14 pips. Bitcoin, and I talked about this with my staff yesterday. Everyone's talking about the world ending. Everything is going awry. We were just chopping around for 3 weeks. We have all the crypto contagion FTX, Celsius going down, Gemini, we had another crypto lender or a crypto company go down. Let me see if I can get the name of this one. This is a crypto exchange, Hubi, whatever, to lay off 20% of its staff. So again, think of every bad news you can think of when it comes to crypto, yet Bitcoin futures, again, I'm just going Bitcoin futures here, just staying around 16,740, kind of holding on to that pre-breakout level that we had back in 2020, right around November. And that's where we got the big pop to around 69,000. And then we came back. So you can see that yellow line on the weekly kind of hovering that support. I'm thinking to myself, with all these bad news in terms of crypto, Celsius, FTX, all that, we should have been below 10,000, but we're not. So that's telling me that people are holding on, that traders are probably have their Bitcoin in wallets. I do. I didn't put it in an exchange. I pulled that from Coinbase. Remember, Bitcoin to me has just been sitting there in my wallet, in my safe, not even looking at it anymore, because trading it here is kind of pointless, at least for me. So 16,735. I mean, think of every excuse for us to fall. We haven't had it. So again, that's really interesting to me. Ethereum, which is a higher beta Bitcoin, let's just say, or a higher beta to Bitcoin. And Ethereum on the weekly, again, still kind of holding around to around 1248. 994 was the low in July, still relatively holding. And that's interesting because, again, all the excuses in the book to go ahead and flush down, and we haven't. Quickly on Tesla. Tesla is holding above 100. They did have more discounts than expected in terms of China sales. I think it was the Model Y and the Model 3. I posted it on Instagram. Feel free to take a look at that when you guys get a chance. We'll go to the 10-year yield TNX. On the 1 hour, you could see it did fall a bit. We did fill a couple of gaps, but again, right now, still kind of hovering below 3.7%. Again, that's really the key. We really need interest rates to come down just a tad more, which is what I expect. Again, I was expecting around maybe 3.5% or below with a strong NFP, but we're not quite there yet. But below 3.7 is fine. Again, that's going to help mortgage lending and lending at all. But again, if you are the Fed trying to restrict monetary policy or restrict money flow or liquidity to reduce speculation, which is what they were trying to do, which reduces inflation, you want rates to go higher. That's pretty much what they want. But you could see now, again, kind of just hovering around that 100-day and 20-day moving average on the 10-year yield. Let's go to the volatility index quickly, and then we'll go over the number. Volatility index, again, still below that trend line, still near support of around 20 to around 1950. We're now at 2197, so not much there on that front. The dollar index now starting to go red or kind of close to going red. You could see that breakout above 105, now kind of hovering around. We got as high as 105.60 before the non-farm payroll report. We do have earnings season coming up. Bank of America is reporting earnings. They're usually the first ones, the banks, on the 13th of January. That is about, well, actually next week. How about that? So if we have earnings season, we have, what is it, CPI and PPI coming soon. Let me go ahead and verify that for you. Let's see here. Let's see next week. Next week, we do have CPI. Thursday, the 12th. You could see that here. We have consumer credit next Monday. Fed Chair Powell speaks on Tuesday. Fasten your seatbelts. 10-year bond auction on Wednesday. We have a CPI number on Thursday and the consumer sentiment on Friday. When it comes to consumer sentiment, keep in mind that's very tied to gasoline prices. So we'll go to RB to kind of give us a little bit of clarity on where that is. You can see on the hourly, still relatively down, but still elevated at least in the last 20 days. But $2.30 a gallon, at least on wholesale gasoline. If we bring up the daily, again, this is a good chart if you are a consumer who drives a lot. You want to see this still stay below this 251 area, which again, that'll prop up consumer confidence and kind of give the feeling of good news. Let's go to the NFP number finally. The NFP number, if I can bring this up, 223,000 jobs added. Slower, but still solid. Again, still a beat. So again, it was higher than expected. Let me go ahead and bring up S&P 500 futures. Unemployment now back below 3.5%. And again, historically speaking, that's a 50-year low. Participation, little changed, no big deal. Wage growth slowed. That's the big one. Wage growth slowed to 4.6% year over year. The Fed will like that, obviously, but in terms of the bigger picture, guys, really the macro sense of it is, again, the Fed wants you to get paid less in a way. They want wages to cool. They want more people laid off, I know, but this is what reduces speculation, capex, and the flight of money. Again, in order to reduce inflation, their view is that let's kill demand instead of boosting more supply. That's what okay, with the supply chains and everything like that. So in a weird way, the Fed does want you to lose your job. I hate when that comes out, but that seems to be the case. But at 3.5% unemployment, the Fed is not exactly getting what they want. Do they raise more rates? Do they get more aggressive? Do they have more of a hawkish tone? That remains to be seen. We'll see what Powell has to say on Tuesday going forward. But in terms of the market, listen, a nice boost. But again, look at the S&P 500 futures. It's chopping around. Let's see how we do at the open. If we get above 39.20, really, that's really the only time you can be bullish on the indices. Break below 3,800, you could be bearish. But I had some shorts this week, but just ran out of time on that one, unfortunately. But that's what happens in a very choppy week with holidays and stuff. This is what happens. That's why I was a little more conservative this week. But as we get into next week, when we have a little more volume, a little more liquidity, a full trading week, then we could start making some moves, and maybe we can get some momentum up or down, and we'll see what we get. Good morning. Jonathan's asking about QQQ calls. Let's go and take a look at it. QQQ calls, again, you could see the Fibonacci level. I'll bring this up to give it some clarity. And this Fibonacci level is really just from the bottom that we had, the lows of October. Again, still my bottom that I called. Again, a lot of people may not agree with me, but we're still above the lows that we said, the 200 MA on the weekly on S&P 500. That's 3501. 254.26 is the low on QQQ. You could see that right now we're trading around 263.42, about $2. But again, based on the fibs, just from the bottom at 254.26 to the most recent peak, which was the CPI number that we had in December of 296.78, we are still below the 23.6 fib, or getting below it and rejecting it. So again, 260 or below, I think that's where I would want to go short to 255 on Qs, but you need to get it below 260. In order to go long on Qs, you don't have much gaps to play with. I think you have one at 283.14. But again, you need to probably get above 266, 265 to possibly target the 270 range. But right now, you're just getting chopped, my man. Let's see. Why is Tesla down? Any news that you saw? Yes, the Tesla was information, or the Tesla. Here's the Tesla headline. Here you go. It's from Bloomberg. Carl Quintanilla retweeted it. Tesla shares are poised to extend their slump after the car maker made another round of price cuts. Again, margin compression in China's increasingly competitive electric vehicle market. That's NIO. Remember, NIO's Kia, Ford. The starting price for Tesla's locally built Model Y utility vehicle has dropped to a new low of $37,875 from 288,900 yuan. Now it's 259,900 yuan. So again, a little bit of a discount there. The standard range rear-wheel drive version costs 43% less than the basic Model Y available in the US, which has a longer range and it's all-wheel drive. Friday's price cut lowers the Model 3 to 230,000 yuan to 266,000 yuan, let's just say, about 30% cheaper than in the US. So again, you're starting to get some of that currency slippage, and that's very important. When you see the earnings coming up this week for all the names, if they're a major corporation that does business overseas, a multinational, a dollar being strong does not help them. Keep in mind, remember, they make money in, let's say in Japan, they get paid in yen. They still have to convert that to dollars. Again, it costs more yen to convert to dollars, as we know with dollar yen. Forex, foreign exchange currency slippage is a big deal. If you are a multinational company, you want to make sure that the dollar is weaker so you can have more sales overseas and then not be hurt on the slippage. Remember, Apple had that the past 2 quarters. We talked about, I think Nike had the same thing. It was like a cost of about $700 to about $1 billion in a charge for Apple just on currency slippage. But we'll get more of the color once we get earnings coming out with Bank of America. But Bank of America is more domestic. But once we start getting more of the multinational companies, we'll see how the dollar is a headwind towards their margins. Tesla already cut prices in October with China's mass market and premium EV segments. Again, it becoming increasingly crowded. You have so many names coming into EV, but again, Tesla's still the king with market share. So that's why the stock is down today, but still holding above $100. I think once you get to $100 a share on Tesla, it becomes very, very compelling to a lot of dip buyers. Now, if you're asking me what I want to buy Tesla at 100, there's a gap to fill here right at 83.22. I don't know if we get there. Would be pretty tough, but I think below $100 isn't the worst price to get. You're starting to probably get to capitulation around these levels once below 100. Retail investors are starting to pull money out of the market too. So again, kind of a washout when individuals probably have margin trading and they got hit holding an Apple or Tesla long term, or some of the darlings like a Lucid or whatever growth stock out there. They got hit. So again, you can see that we had the biggest. I want to see where that is because I retweeted that information. Let's see. I think I had it here. I think I had it on my phone. Let me go ahead and see it. I think I had it from, what is this, from Bloomberg. But I just did an actual picture of it. Let's see if I can find it rather quickly so I don't waste anyone's time. Here we go. This is from Seth Golden on Twitter. My apologies. Love Seth. Big follow. I love him. JP Morgan retail traders unloaded $3.1 billion in assets the past week. This marked the third worst week of net selling in history. The third worst. So you started to get capitulation. Retail traders generally throw in the towel during the first 2 years of trading right on schedule. And again, this is not easy being an investor, especially in a bear market. And as someone that has been doing this since 2014, we've seen bear markets all the time. And again, guys, they do pass. I'm not going to sit here and say the world ends forever. I've had this conversation in 2020 about COVID as well. Again, if you're an investor and you're holding long term, you're pretty much just rolling with the punches. But if you're a Tesla investor, again, we talked about the sections, the 2022 investors versus the 2021 investors versus the 2020 investors. If you bought Tesla in 2020, more than likely you're not hurting that much. If you bought it in 2021 or 2022, you are hurting. So again, it really depends on pain thresholds. If you're someone that just auto invest in an ETF, none of this really matters. But again, if you're a Tesla investor, maybe you're very heavy in Tesla, I could see where it starts really hurting. Young Jay answering. So yeah, Tesla giving China another 9.9% discount. Again, that's margin compression. Thoughts on AMD? Let's go and take a look at that. AMD broke my alert yesterday. I didn't trade it just for the simple fact that, again, it was just a very choppy market, especially with NFP coming up. So again, taking a look here at the daily 2-year chart, and you could see just pretty much set here in this downward channel. Really need to get above 71 before you get any excitement on an AMD. AMD right now, you can see that 60 is possibly the next target. Again, what I want to short this rally, if we start getting rejection of around 66.25, you can see that is your 20-day moving average. That's where you want to go if you're a bull. Maybe get to 71. But again, more than likely, especially if interest rates go higher and the dollar goes higher, AMD is an international company as well. They'll probably get rejected and get you down to around 60. Would I be a buyer of AMD here? I'd rather wait and see if we get momentum to the upside before I start adding more. I wouldn't want to just catch the falling knife here because it's pretty clean, this downward channel here. So not much to go by in terms of edge. In your opinion, are you seeing a green day or a sell-off at the open? Let's go and take a look at it. S&P 500. Back to the hourly chart. And again, here's where we are. Do I see us kind of hanging around green? Well, we're selling off a little bit from the top. God, to be completely honest, I think we just chop around. I think that we just chop around. We probably end up the day green, pretty small, but nothing crazy. I think we just hold that 38.40 level and kind of get you around 38.80. It'll be a nothing burger for the most part. Really, again, unless you get above 3,900, I think you'll end the day green slightly, but again, chop it around. Really no edge here as, again, it's still a shortened holiday week. Even though we had the NFP catalyst today, we need the dollar to pull back below 105. So again, it's really on the dollar. If the dollar can reverse back below 105, stocks will go higher. If we start breaking above and continue to go higher, then the stock market will go lower. I wish it was a little more complicated than that, but it's not. So again, you have 106.12 as your 200-day moving average on the dollar, or 106.10, let's just call it. So let's place an alert there. If that breaks above, then we need to start getting into the put side and see if we get back to this trend line of around 107.61. Gives us an opportunity to short an AMD, to short a Tesla to 100, and all these other names, maybe short Apple as well. Thoughts on adding Roblox in this levels? Roblox, we need more people to play Roblox, right? And you could see Roblox here on the daily. There is a gap to fill at 32.02. So again, you could always trade this, kind of keep this 32.02. So what you could do, let's say if you wanted to buy some Roblox here, and you're above the 20-day moving average, which is a good momentum indicator, at least in the short term. So you could go ahead and maybe trade this name to 32 for 32 calls. What I want to add here, I think the only way I'd want to add here is if we can clear above 47 or 48. And again, I want momentum to the upside. I don't mind being a little late to the party, not being the first one through the door. Let's see if I can get the momentum to the upside, not actually plant my flag and be like, I'm the first dip buyer. Let's wait for the whole market to start doing some momentum to the upside, and then we can catch up. We don't need to be the first ones there calling a bottom or anything like that, or buying the dip here. But again, Roblox is actually doing okay, relatively speaking, on a technical chart. You got some gaps to fill. So again, you could see that 25, 24, 59 support. Not a horrible place to go, but again, look how much it has fallen down since then. 74.60 is a very, very key level for Roblox to get above. But again, kind of like Netflix, a lot of gaps to fill to the upside. If you're a technical trader, you're watching this pretty much every day to see if there's any edge. Maybe the 32 calls, maybe Roblox gets you paid. Maybe that'll get it be enough to take those profits and add to the stock. Could be something to do, but again, 32 would be the target. We're about $2 away from that currently. Thoughts on CVX and XOM? XOM rose last year 80 something percent. Pretty tough to call that and saying continuation to the upside, especially with oil falling as well. We're right around $75 a barrel. You do have a gap to fill at 112 or 113. I don't mind playing that for calls. I think it's more of a trader's market than an investor's market currently. Been saying that now for about 3 to 4 weeks. I think XOM isn't a bad trade here at 113.22 if you're looking to go calls. But to buy the stock, I think I'd rather see this gap fill right around 95.39, maybe retest the 200 and see if we can boost and bounce off that. I had a question with Merck, Merck being one of the best performers in the Dow this year. We traded Merck last year with Investment Club. Some of our Investment Club members were asking me, hey, would you buy Merck here? And I said, what I would want is see if we can retest and fill this gap around 96.03. So again, I'm kind of keeping that in mind with the XOM as well. We have another gap here at 102.04, maybe 102.40, maybe wouldn't be a bad place, but again, we need a nice little fall on Merck, which has been a value stock darling. But again, there we are. And CVX, I like CVX a bit more than XOM personally. I've traded XOM, taken some a CVX, taken some profit. In terms of gaps, you got one big one here at 145.28. Really, if you start breaking below the 200, it would start getting interesting. What I want to go ahead and buy right here, right now? No, I think XOM calls would probably be best. And then you could use that profit if we did fill that trade, fill that gap. We can go ahead and possibly buy some shares and see if we can get some momentum to the upside. There's a lot of gaps to be filled, both sides, up and down on all these stocks. Let's see if we can get momentum up or down and move forward. But until then, I really don't want to put both my feet in the water without knowing exactly what the Fed's thinking, what the data is going to come with. Other than NFP that we just got today, really not much has changed. We need to see what Powell says on Tuesday. Let's see if he talks about monetary policy. February 1st, we have the FOMC. Next week, we have CPI. So again, a lot of landmines. I expect CPI to be down. Maybe we get a pop. But again, all it takes is one little Paulito, a press conference to change the tune of the party. So I hope all of this makes a lot of sense. I know there's so much going on. But again, guys, it is a new year. We are coming off a holiday week, very, very choppy. This is just what it is in the last 2 weeks. So again, if you're someone that wants to do this in the future, the last 2 weeks of the year, take it off. Just enjoy yourself. I said that in the morning. No, I said, hey, you know what, guys? Last 2 weeks are kind of choppy. Just take the week off and just relax. there really wasn't much going on other than the macro. So that's right. At least we have football, and we have a lot of football this weekend. Good news on Hamlin. He's starting to feel better. That's what I read. I mean, that was just a horrible, horrible play. Can't wait to see some NFL this weekend. I love sports, man. What can I say? Go Cowboys! Beat the Commanders, and I know I have Philly fans here. If you want to lose to the Giants, I'm totally okay with that. The Niners scare me, Ben. I do not want anything of the Niners, but I'll take Philly. I definitely want to go against Philly in the playoffs, but I definitely don't want to play the Niners. Oh God, please don't. Let's see. Go Lions. Yes, go Lions. Let's keep Aaron Rodgers out of the playoffs, damn it. I'm tired of losing to that guy. Have a great rest of your morning, and we'll see you guys later. Ben and Henry and Thomas, all you guys, Joe, Young, Judy, Young Jay, and Jonathan, big shout out to you guys for answering questions. One day we're going to do a sports talk on YouTube for fun. Maybe do it during the football games where we can have a chat or something. Just whatever it is to enjoy life. You know, the saying goes, Colin Cowherd said something very, very interesting the other day. He said, love your life like you love your sports. And that really sank in. Imagine if we loved our life the way we love our sports. How nice would that be? But I do love sports. So maybe in the future we get that podcast going. I have a lot of reports to do this weekend on Saturday, so I'm going to be a very, very busy man. A lot of stuff for Investment Club. The top 10 stocks of 2023 is coming. The top 10 stocks of 2022, I mean, I don't know anyone's top 10 that did well in 2022, so I don't feel too bad, but let's see what 2023 brings. We'll bring that information out to you guys. Newsletter coming out this weekend as well. If you haven't signed up already, make sure you do on our website, gar.capital. There is no .com, gar.capital. That's the site. Just type it in, gar.capital, and you can sign up for the free newsletter, talk about the markets. If you like this morning note stuff, then you'll really enjoy the newsletter as well. Have a great rest of your morning. Market's about to open in about a minute and a half. I will see you guys on Monday. Have a great rest of your weekend. Cheers, guys.